This is Eric Mwatha with Mwatha.com for the week of February the 12th, 2012. We are looking at a market that was down the second week of February. So let's take a look at what the charts are going to be telling us going into the new week and see whether the weekly that down week is going to change some of the charts that we were looking at, especially on the weekly front. Seems to be that down week might be significant. And let's begin with the Dow Jones weekly chart. And what you see that with this down close, we see that now the market is not following through on its breakout. The previous breakout was above 12,810. Now the market is way below that. So we can say right now, given where the market action is that this is a failed breakout as of right now. So without going into too much detail, what does that mean? Is it going to be a big pullback? What amount of what kind of a pullback are we going to see? The bottom line is right now we are looking at the Dow Jones net failing to follow through, in fact failing to hold the breakout level, which in another way of looking at it is a failed breakout attempt. Now usually when the market stalls and heads lower, sometimes the classic reversal signal is a failed breakout, and this is what we are looking at here. Now, like I spoke of last week, remember this market is not going to go straight down because we have this trend lines, which is the 10-week moving average, the 33-week moving average, which are going to offer this market some kind of downside support. So it's not going to be straight down. Normally when you see the market head straight down is when it's trading below, like it did in August of last year. When it's trading below its moving averages, that tends to be an area where there's free fall. But when it's trading above its trend lines, this tends to be an area to cushion the market as buyers come into the market whenever the market pulls back. But so we are looking at the Dow failing to hold its breakout on a weekly chart. Let's take a look at the Dow on a daily chart. Now what we see is that if we take a line here and look at the market from making 52-week highs right there, so about a week ago the market was at new multi-year highs. We seem to be moving back below those levels, which is again another breakout on the daily chart failure. But remember, the market is eventually going to have to contend, even if it moves low over time, it's going to have to contend with an upward trending 50-day moving average. It's going to have to contend with an upward trending 200-day moving average. The net interpretation is that there is going to be some level of support in this market for a considerable number of months. So it's not going to be straight down unless it really starts cracking through those levels. Let's take a look now at the Dow Jones on a monthly level. As far as the monthly chart is concerned, again, the monthly buy point or the monthly breakout was at 12,810. We are now back below that. So this monthly breakout attempt is already showing signs of a failure, and this could be a high. Again, remember, a failed breakout can be notorious in starting a market leg down. Now let's take a look at the Nasdaq now on a weekly chart. The Nasdaq is still above its weekly buy point of 2,873. So the Nasdaq is still holding its own. We'll see whether it's going to hold that, but as long as it remains above this